analysis on this. Let's go straight to New York. And Colin Gillis, senior analyst at BGC Partners. Colin, welcome to Bloomberg West. You called it a wild ride for Cisco in after hours. Chambers admitting the growth that he promised is not possible. What's your reaction to that?
You know, I mean, definitely, Emily, it was a wild ride in the after hours with the stock soaring on looking like a nice, strong quarterly beat on the earnings. But, of course, the guidance is tough. I mean, he's talking about 0 to 2% revenue growth for the next quarter. If you think a little bit more about what's happening at Cisco, we're right in the middle of the turnaround. They talked about ripping $1 billion out of operating expense on an annual basis on a go forward. It does mean headcount reductions for the company. They are going to be, reducing some of the adjacencies. There is weakness in the public sector. There's competition in the switching market, but there's also a lot of good pockets of growth going on in this company as well. Asia Pac was up 14%. In their core routing, that was up 7%. So there are positives to go along with the negatives. The company is making efforts to streamline itself.
Hey, Colin, Cory Johnson here in San Francisco as well. Interesting to me, the discussion of getting away from M&A. I mean, Cisco has been a serial acquirer, issue of shares, gobbling up everything from WebEx to tiny networking companies no one ever heard of yet. I gather the WebEx business did okay as well. But I'm just shocked that they're going to get away from M&A, which has been their bread and butter. It's maybe the thing they were best at for so many years. Yeah, and let's give it some time, right? And see if this is a temporary change or a permanent change. I would suspect to see that, first and foremost, they need to fix their own house, right? Get their own house in place, resolve how they're going to handle the switch market in particular, where there's a lot of competition coming in at much lower gross margins. And then, maybe 4 quarters, 5 quarters down the line, I would not be surprised to see them pick the M&A handle back up again.
Colin, Chambers said we know what we have to do, but does he really? Is he still the right person to be running Cisco?
So we have to see, right? The key thing here is the addition of COO. Gary Moore came in February. I mean, the current quarter was actually quite good. We saw a lot of the things that we wanted to see. The company is trying to streamline itself and become more nimbler and faster. Now, the key thing here is, can they control their operating expenses as they promised? $1 billion is a big number. They've got to get through that in a relatively timely manner. And, in terms of that long-term growth rate, 12 to 17% being off the table, well, a lot of us knew that was off the table because of the fact of the matter is the company has not been producing growth like that for quite some time. To see a flat to 2% growth number, that's even lower than what the street was expecting. Where people are looking for this company to grow in that 5, 9, 10% range.
Do you have faith in Chambers? Do you have faith that he can do this right?
I do, actually, right? I mean, there's a fair amount of negative commentary around him, but the reality in my book is that, he does have a history of executing. I mean, this is a very large company that has #1 or #2 market share in almost every market that it positions in. The notion of the councils, while it's been much maligned, had some benefits in terms of pushing power down onto to the lower levels of management. So, well, again, let's give him a couple more quarters to see if he can pull around the restructuring. And then if he can't, that will be pretty obvious to everyone.
Colin, do you think the cutting needs to happen at the top, not John Chambers, but the layers of management, or do you think that it's the wild hiring of every salesperson, of every engineer, of anyone that can get in there to work?
Yeah, I mean, there's actually both, right? The reality is when you have all this M&A, you get these organizations that sort of stacked up on top of each other. There's a fair amount of redundancies, and when Cisco had it really good, it was not much competition, and big, healthy gross margins. There was no need to really go and examine every single dollar that was being spent. Well, that's no longer the case. In fact, you saw it in HP's keynote at Interop yesterday. That they're saying Cisco's products are expensive, right, and that they're not worth the premium. That we're out there and we'll sell you that, the same type of equipment at a much lesser price. So this is what the company's going to be facing on a go-forward basis in some of its markets.
Now, really quickly, Colin, what was working at Cisco in the quarter? Because, as you mentioned, the numbers for the quarter were probably better than a lot of people were expecting.
Yeah, absolutely, right? In fact, you saw it was up over close to 5% after hours, right? Just on when the numbers hit the tape. So what was working? Routers 7%, new products up 15%, and then services up 14%, and then finally on a geographical basis, Asia Pac up 14% year over year. So there are some good points in here. It's just that this is a company that's restructuring.
All right, thanks so much to Colin Gillis of BGC Partners. We will be continuing to follow Chambers' turnaround efforts at Cisco and see if he can indeed make it happen.